We try to bring you high-quality educational and informational content every single day. Why do you think the price is having such an anemic time? The news story of the hour. Jump onto the chart. Is this the beginning of a massive financial unraveling? We got to add a little addendum to the show map today. So we start here on the daily. Now, we've been looking at the RSI on Bitcoin's daily chart for the last several days. It always has been, but it's been increasing over the last 50 years since we've been out there. The government has been Hey guys, what's going on? Jebb here, and in today's video of Coffee and Crypto Live, we are going to be talking about the big drop that you have just witnessed happen on Bitcoin, and we're also going to talk about why my hair is dropping here in just a minute, because I've got a lot to cover in today's episode. As you guys know, yesterday we talked about how Bitcoin was in danger of going through a major drop if it fell below a critical level of support and an uptrending level of support. Well, that level broke. And now Bitcoin is approaching a critical level of support at $25,236. I discussed yesterday why this drop was highly likely, and I also discussed a potential short trade that you could have entered to make the most out of this trade. Many of you guys, if you're in that trade, you are probably doing pretty well right now. So we're going to cover that trade. We're also going to cover where Bitcoin is going next. And we're also going to cover a couple of FinSov principles, because today is Friday, hashtag FinSov Friday. Thank you guys so very much for tuning in. I hope you're looking forward to today's episode. Let's go ahead and read some chat, though. I'm very, very, very excited to see how all of you guys are doing. We've got Mike Lowry in chat, a moderator and a member, said morning. He was first. Shout out to you, Mike Lowry. Sean O'Brien said, hey. Good to see you, Sean. We've got Queen, who says she was first. I'm sorry, Queen, you were third, but it was a valiant effort. Daniel J said, good morning. Crypto Neb said, morning. Philly Skills 1428 said, yo, what's up? BTC Crypto Alerts gave us the Keep It 100 symbol. Who knows that song by, it's not Audio Adrenaline. Who is it? Keep It 100. The band's not even together anymore. It 100. What song is that song? Not the song you're thinking of. Not the Soul Cartel band or whatever. It's the, yeah. Gosh, I can't find that song. It's a great, great song. But, yeah, I guess I'm the only one in the entire world that knows the song I'm talking about. Mike Lowry in chat said, happy hashtag FinSoft Friday. Queen said, Bedrock present. We've got Kevin Grims saying Bedrock is absolutely not present. I assume you're talking about because of the drop that's taking place right now. Queen said, Data Dash. My friend Nicholas Merton is calling for 12K Bitcoin by Q4. Pastor Jebb, what you say? I think that a 12K Bitcoin is highly unlikely unless we see a just an absolute, complete and total shakeup of what we were seeing happen with the effective federal funds rate and the quantitative easing. If they accelerate QT, quantitative tightening, if they accelerate QT and they just start raising interest rates through the ceiling to like 7 or 8%, then maybe if the stock market breaks critical support and it goes through a massive correction, it's possible. I would like to see more of why Data Dash believes that. I need to do a better job of keeping up with his videos because he's got some great content. Like I said, guys, Data Dash is a good friend of mine, and while I was one of the first people in the crypto space to be doing technical analysis, he was before me. Like, he's the guy that inspired me, and I've been doing this for almost 6 years. So Nick has been doing cryptocurrency TA for a very, very, very long time. Would absolutely love you guys went and subscribed to his channel and told him that I sent you. All right, let's see some more chats here. Kevin Grimm said, understandable. Oh, yeah, Kevin asked, I thought Jebb gave up coffee. I said, I did, then baby. Yes, that's exactly what happened there. She's a little angel, though. She'll sleep for 5 or 6 hours straight sometimes, and she just does a great job. She's a great, great baby. We're just very, very thankful for her. Kevin Grimm said, y'all sleeping yet? Yeah, I'm not tired. That's the thing. Other than a few nights where she caught a cold, we've been getting really good sleep, like at least 6 hours of sleep every night. So while it is obviously difficult having a newborn, it is an incredible blessing, which it would be even if it were a lot harder. But yes, and believe it or not, we actually are getting enough sleep. So that's really great. When people's in chat, Jojo in chat, the classic IT guy in chat said Death Cross is in play. We'll talk about that in a moment. Colin MacDonald is in chat, said, hi, Jebb, Queen, Mike, and all watching. Dim Power said, good morning, brother. Cosmin B said, good morning. Stop the drop, Jeeb. I wish I could, but I cannot. But I do want to let you guys know why my hair is drooping today. Today, I did not put any pomade in my hair, so I didn't put it up and do my whole, fancy slick it back kind of maneuver that I normally do because I'm getting a haircut today. I know you can't believe it. I'm getting a haircut more than once in a 6-month time frame, but no, seriously, I got a haircut today. So that's why here in like 2 hours, I'm getting that done. So I didn't want to put any product in my hair because it makes it a lot harder to cut hair if you've got stuff in it. So that's why my hair looks like I just rolled out of bed. I did actually work with it this morning. I just didn't do anything to it because I want to make sure it's easy to cut. Coffee required with any kids. That's true. Lol, Jebb getting lots of Jebb love today. Yes, absolutely. Coco Mijner said, hi, Jebb. Greetings from Nigeria. Greetings to you as well. All right, let's go ahead and jump on over to CoinMarketCap. Bitcoin is currently trading at $26,500. Yes, you heard that right. It's down 2.6% over the last 24 hours, down 8.89% over the last 7 days, and up to 21.51% over the last 90, and still up nearly 60% year to date. I want you guys to keep that in mind as Bitcoin corrects here because I don't think it's done. That being said, it is obviously still doing quite well. Ethereum trading at 1782. It is down 1.42% over the last 24 hours, down 8.09% over the last 7 days. It is up 16% over the last 90 days, and it's up nearly 50% still year to date. Binance sitting at $300, XRP sitting at nearly 43 cents, Cardano sitting at about 37 cents, Dogecoin at 7, Solana at $20, Polygon at 85 cents, Polkadot at 525. Scrolling down here, there is one that I want to mention, and that would be none other than Pepe, that cryptocurrency that all of you guys wanted me to talk about, and all of you wanted me to buy in up here when it was trading at whatever that is, for 100. I'm doing that thing where I'm like, what is it? It's 4/100,000ths of a penny, something like that. I'm not even sure. I think that's what it was trading at. It's got. Oh, okay. I see why the max supply is 420.69. Yeah, billion, trillion. Okay. Anyway, meme coin aside, this cryptocurrency is currently down by nearly 75% in a week. Yeah. So here's a couple things on this. A lot of you guys have been talking about it. This over here is just a complete joke to me. Pepe coin price prediction 2023, 2025, 2030, 2040, and 2050. I think it's laughable that this is still going to be relevant in 2050. So I actually kind of want to click on this. I see this every time that this cryptocurrency comes up. Oh my goodness. All right. Is it worth buying? Might be worth buying a tiny little bit. You know why? Because there a lot of times when there's a meme coin rally like this, a lot of times there's a second rally. It could very easily pump a little higher than it did the first time. There is possibly some gains here. I just would be very, very careful because if you're buying after this point, after 5/5/2023 at 1:10 in the afternoon when it peaked out at 4101, we'll just call it, then you are the person that is paying for the people that bought before its gains. So if you bought before this, you're winning for the most part. If you bought after this, you are currently losing for the most part. And that makes me sad because this is not an investment that you want to put any more than 1% of your portfolio in. If you've got $100,000, don't put more than $1,000 in meme coins. I get it. Look, I understand. Meme coins just, boom, explode 2,000% out of nowhere. Sometimes there's money on that if you get in them early enough. Frankly, we probably should have seen it coming that Pepe, the giant meme that it is, would have eventually become a meme coin. Like, that was low-hanging fruit. And if you had caught that back when it was a lot smaller, back when it was worth, $40 million rather than what it is at right now, then yeah, that was probably not a bad trade. As far as it probably wasn't a bad thing to buy just a moon bag of. But don't go basing your portfolio on moon bags, guys. There's nothing wrong with having a moon bag, but don't base your portfolio on moon bags. Don't base your strategy on moon bags because there's no way of confidently predicting that that is ever going to give you any kind of return. I love just tearing into into certain into certain meme coins because they just get so they're the exact opposite of what we preach here with financial sovereignty, of using wisdom and logic and rational thought to make an investment. That's not to say there's not a way to make a profit in meme coins. There is, but you have to be very, very careful about it, and it's not as simple as just aping into it and buying it whenever you want. That is how you become unsovereign with your finances. All right. Let's go ahead and jump onto Bitcoin because that's what really matters right now. Bitcoin, there's a lot to talk about here. So yesterday, we had a live stream saying that with the title, something to the effect of Bitcoin's about to break through critical support. Bitcoin at the time was in this symmetrical triangle pattern. And it was breaking bearish out of it. Just to give you context, we were live yesterday right here. you can see Bitcoin was just on the very edge right here. And I don't know if I have it up on another chart. Let's see. Do I have it up on another chart? I don't think I do. I think I deleted it because I made a video yesterday that'll go out tomorrow, and I had to clear a chart. I think I cleared the chart. But yesterday, I gave you guys a short position, a short trade with an entry, I think, at 26,900. And then I had a take profit at 25,500, I think I had it at. And then the stop level was at, I think, 27,100. I think that's what the trade setup that I did for you yesterday was. That is not set up correctly. That would be 25,600. 25,500. Give me 1 second. Yes, I believe I had this trade set up for you guys yesterday. So you can see that if you did enter this trade, then you would have had a stop risk-reward ratio of like 7x, and you would have also been on the extreme here, about halfway through it. Because if you had like a take profit about halfway through, then you would have been you would have already exited some of that. So one of the tips for trading that I can give you guys is that a lot of times you're setting up a trade, you can either exit all at once, or you can break your exit up into 2 or 3 categories. What you could have done in this case, and what would have been successful in this case, was if you had a third of your exit at the actual exit at 25,500, but then you had an early exit to lock in some profits, and then you had a late exit in case the thing just absolutely floors. If you had done that, then you would have already exited with 1/3. So this is just a good example of how sometimes exiting a trade with exactly 1/3 of the position when you're about halfway to whatever your eventual price target is can be helpful. So again, just to reiterate, if you're 50% of the way to the price target, then you have one exit. If you're 100% of the way to the price target, you have a second exit. If you're 150% of the way to the price target, meaning you're 50% farther than the price target, then you might have that third exit. That is best done in long positions, because if you were trying to short, you can't just roll over an ineffective trade back into your investment portfolio to just hold on to it for the next 5 years to force it to be profitable, because you have to cover the position that you borrowed from the exchange. So that's not the best bet to go to hold on to something beyond the short trade unless it's a very small portion. But with longs, that is something that can be very effective. That short trade would be profiting quite a bit right now. You can see we put that entry price right below this flat level of support at 27,100. It was right around the time that we broke below 27,100, as you can see right here, that we started going through this major correction. And we also can see that Lux Algo called that pretty perfectly. Lux Algo had a sell signal right here, but we've also been under a confirmed sell signal since right here. Ever since this confirmed sell signal came into play, Bitcoin has dropped 7.69%, and this is a sell signal on the hourly chart. That just goes to show you how powerful Lux Algo is right now. It's giving incredible signals. And when this signal was confirmed, if you had to follow through with it, right now you would be down. You would be 6.5% to the downside. If you were in a short trade, there was 1-to-1 leverage, so basically no leverage, then you would be up 6.5%. If you were in a 10x leverage trade, you would be up 65%. Please be very, 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 very careful with leverage, because leverage involves debt, and debt is one of the fastest ways to not be financially sovereign. But there are places where debt can be useful. Just be very, very careful with leverage if you are going to use it. Okay, so a couple of things here. Number one, you can see that Bitcoin fell into the reversal zone on the 1-hour chart a first time. Then it bounced out of it slightly, and then we fell into it a second time. Now we're bouncing out of it slightly. We're not getting a lot of exuberance. It's very possible, therefore, that if we don't have some kind of exuberant rally back up to like the stop loss that Lux Algo is giving us here around 27,000, that we're going to need a third leg to the downside to re-enter that reversal zone. That would require Bitcoin dropping down to its eventual price target right here of around 25,500. That's the price target that we gave from our trading. That's also, as you can see, the middle of the blue price target that Lux Algo is giving. And it also sits just a couple $100 above 25,236, which is that all-important level of support that we've talked about at length. I do believe at this point you're going to see a third leg to the downside, moving down to around $25,236. I don't know if you'll necessarily get all the way there, but I do think within the next 48 hours, you will see Bitcoin trading all the way down to that range as a result of a confirmed sell signal on daily chart that is now being exacerbated. And that is turned into a strong sell signal in the last 4 days with this solid red candle coloring. And also considering the fact that the reversal zones have flatlined and the bottom reversal zone is sitting right here at 24.5. At this point, since we're bouncing in between the top of the reversal zone and the bottom of the reversal zone and bouncing off the top of the reversal zone, I'm giving a price target, which is the same price target I've given for a couple of days now, ever since I flipped bearish when we started breaking bearish here below 27,100. I'm giving a price target between about I'll say $24,100 and $25,236. Somewhere in that region, I think, is where Bitcoin will eventually bottom out. And I think that it will actually be an incredibly healthy thing for Bitcoin because Bitcoin is finally getting the correction that it needed after the March rally that we never actually received. We are having this happen at a pretty solid time, too, because we still saw an effective federal funds rate hike and we saw a very small CPI drop, which means that those two, quote unquote, potentially bullish events were not very bullish. CPI was not a big drop, so it's not like we're wasting a 0.4% drop, and we did not have a Fed rate pause, which means we would be wasting that bullish news either. We have two bouts of normal, kind of nothing burger style news, meaning that we're not wasting an opportunity to go through a major rally because of CPI being released or because effective federal funds rate paused. Instead, both of those news stories were just nothing special, so Bitcoin going through a correction right now is actually really good timing. On top of that, the other thing to keep in mind is that Bitcoin dropped right here, 13% in 7 days, a $4,000 drop. Right now, Bitcoin has dropped $3,600 in 6 days. It's a 12% drop. These two drops right here are looking pretty analogous, and they remind me of our Elliott wave ABC correction. Our A correction dropped us down to 27,100. Our A impulse corrective wave, to use the technical term, dropped us down to 27,100. Our B corrective wave, which was a corrective wave to the upside, rallied us up to about $30,000 or so. And our next wave, the next impulse wave, the C wave, will probably drop us down to 25,236 or down to $24,000 at the lowest. Lowest, again, keeping in mind the fact that we have that the top of the reversal zone down there, and we also have historical precedent that 24,000 would be an important level because it's the level that we used as resistance in January. So what do you do with this? Well, frankly, if you were going to enter a trade, you should have yesterday. That's why I gave you that trade setup. But it is not too late to enter a trade. The thing I will say is that if you're shorting at this point on this bearish movement, just keep in mind that Bitcoin will probably end up moving $4,500 to $5,500, but it's already moved $3,100. You've already missed over half of the movement. You probably would have wanted to enter this trade if you were entering it a little early when we dropped below the trend catcher here on the daily chart for Lux Algo, or if you're being a little bit more conservative. I like being a little bit more conservative with trade setups. Then you probably would have entered either right here when we drop below this uptrending level of support, or right here when we drop below this bottom level of support. All three of those, this drop right here below this uptrending level of support, or the drop below this uptrending level of support, or below this flat level of support, all could have been great entries. At this point, if you're entering a short trade on this movement, you're kind of entering in the middle of the movement. It's a little bit like walking into a movie halfway through. It might be entertaining, but you're not really going to know what's going on. And that's a little bit what's going to happen to you if you try and enter this short trade right now. You kind of miss the boat a little bit as far as this daily chart movement. It might be better, therefore, to either take a very small trade just for practice, because sometimes it's a good idea to take a really, really small trade, but actually have some skin in the game, just so that you can get the experience of trading a movement that you've kind of missed the beginning of. That can be useful. That being said, it is also perfectly fine and wise and fiduciarily responsible to wait until Bitcoin has another trend reversal. Because right now you're jumping in the middle of the trend. Ideally, what you want to do is you want to wait until one of the 6 trend reversals we talk about, down to up to down, sideways to up, sideways to down, down to sideways, or up to sideways. These are the 6 types of trend reversals. You typically want to wait for a trend reversal, and then you want to wait for some kind of confirmation that comes a little bit later. Sorry, guys, my mouse is dying on me, so I'm going to have to get a new mouse. Let me use my trackpad here for a second. You basically wait for the trend reversal, and then you wait for a confirmation. Here, 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 or here. You wait for the confirmation. So here, we were in an uptrend, then we started a downtrend. We had a confirmation here, we had a confirmation here, and we had a confirmation here. All 3 of those were your trade entries. The lower they go, the increasingly more conservative that they were. Because I'm giving trade examples on stream, I typically use the most conservative because I don't want somebody to go and get burned because they're going against my advice and just following what I say blindly rather than really thinking about it. So I try to give the most conservative trade setups I can intentionally to protect the people that are watching me and just copying me, even though I specifically tell them not to. That being said, wait for a trend reversal, wait for the confirmation, boom, enter the trade. At this point, the confirmation was either here, here, or here. If you're entering right here, you kind of missed the boat. You can make the trade. You're just going against traditional trading wisdom, which is wait for a trend reversal, then get a confirmation or 2, then go in for your entry. At this point, we've already seen that happen. Now we're kind of closer to the bottom than we are to the actual beginning of the drop, which means you're going to be playing with a worse risk to reward ratio, because you're going to have a bigger stop loss and you're going to have a smaller take profit, which means that if you enter a trade right here instead of the trade that I gave you yesterday, then essentially what you're doing is you're completely changing your risk to reward profile. You probably want to have the exact same stop loss, and you probably want to have the exact same take profit, because those are just the levels that make sense right now. So 27,100 and then 25,500 were the numbers that we gave. And then that entry price, basically where we are right now, that's going to give you a risk to reward ratio of 1.55 compared to the one I gave you yesterday, which is a risk to reward ratio of 7. That's a big, big difference. So just kind of a little bit of teaching on how to do trading. You want to be really careful about the way that you set up your trades, because it can really bite you if you enter a trade too late. And oftentimes if you find yourself trying to enter a trade too late, it's better just to wait for the next trend change. All right, so that's the daily chart down to like 4-hourly chart movement. There's obviously going to be some volatility down in the 1 minute, 5 minute, 10 minute chart. That stuff is not really impacting the daily chart. So if you see a trade down there and Bitcoin's going to move 0.1%, great. Apply the principles. You're going to have to completely do different technical analysis, because if you're looking at the Earth from outer space, you're getting a different view than if you're taking a magnifying glass to an anthill. You're not going to see the anthill has absolutely no bearing, or infinitesimally little bearing, on what the whole planet looks like, right? That's kind of what we're doing right now. We're looking at the whole planet, the daily chart. And if you're looking on the minute chart, you're looking at an anthill under a magnifying glass. So they're two different ball games. Even though the anthill's on the Earth, you basically have to look at those completely differently. So what I mean by that is that down on the minute chart, there might be a trade opportunity. On the daily chart, I personally think you've kind of missed the boat on that. Now, I do think that once Bitcoin bottoms out, then there's going to be another opportunity for a trade. Because remember, we're looking for one of these trend changes. We're looking for a bottom to an up, or an up to a down, or a sideways to an up, or a sideways to a down. You can't really trade going up to sideways or down to sideways, so you kind of want to be careful with that. These are really the only 4 types of trend changes that you're going to go through. And don't worry, there will be future content on this kind of stuff coming into Club DeFi's Principles of Trading. I can't give you a date on when that launches, but I am hoping that it will be this year. We'll see. We shall see. Not announcing anything just yet. Just want to tease some things. However, whenever Bitcoin does bottom out, and it either V-bottoms and starts moving to the upside, or it comes down here, trades sideways for a while, and then starts moving to the upside again, once we start having confirmations, that's when you have this next major swing trade. Right now, I gave you a setup for a swing trade, that being a short position. The next major swing trade is likely going to be a trade to the upside. Give me actually, I'm going to run a poll. Let's see. Let me just go ahead and run a poll. Would you like to see more trade setups like this on CNC? Yes, no, maybe so. Let me know what you think. Guys, if you are looking forward to today's stream and you are having a good time, make sure to hit that like button, subscribe to the channel, and also make sure to sign up for Lux Algo. Guys, I've shown you how powerful Lux Algo is over just the last little while here on Coffee and Crypto. Its signals are absolutely phenomenal. So make sure you sign up with coupon code Jebb, J-E-B-B, 30 for 30% off at checkout, and you're going to get access to Lux Algo's lifetime, you're going to get access to Lux Algo's membership with a lifetime 30% off discount for every single month subscription. It's absolutely worth it, and you are definitely missing out by not having it if you are a trading. Just don't understand leverage trading. Need a 101. All right, let me put it like this. Have you ever bought a home, or do you know anybody that bought a home, put 20% down? They are leverage trading that property purchase on 5x leverage. Let me explain. If you put 20% down, that is 1/5 of 100%. So if you buy a $500,000 home, you put $100,000 down, you borrow $400,000 from the bank, you just leverage traded that home 5x. Why? Well, because you put down 1/5 and the bank put down 4/5. In the same way, if you're in a leverage trade and you trade on 5x leverage, you're putting down $1,000 and you're borrowing $4,000 from the exchange. Then, because you have $5,000, if the market goes up 10%, then you actually made 50% because you made 10% on your part of the money that you have, and you made 40% on the money that the exchange gave you. That works very well for you because it means that you got to make 50%, and it also works well for the exchange because they get to loan out their money to people that are going to make them money by paying them trading fees, because they're going to collect trading fees whether you profit or not. Similarly with the bank, if you're buying real estate on 5x leverage, the bank's going to make money either way, and they pass the risk on to you because the property value goes down, then you have to cover the difference. They don't have to worry about it. They just keep collecting interest on the mortgage, and they also are able to sell that mortgage into what's known as a mortgage-backed security and sell that as a bond package to other investors. That's a little bit off topic. The point is, whenever you're using leverage, you're putting down 1x, and then if you're using 20x leverage, the exchange is putting up the other 19x. So you end up making X amount of profit or loss based on whatever your leverage is. So if you're at 20x leverage, Every 1% to the upside is 20% gain. If you go to the downside by 1%, you lose 20%. Because you're losing 1% of your money, you're losing 19% on their money, because for every unit, they're losing 1%, but there are 19 units of what you're borrowing from them. So they're not going to lose that money. You have to cover that. That's the trick. If you gain, then you get to keep the gains, not the exchange. If you lose, you have to pay the losses, not the exchange, because the exchange is not in the game of trading. The exchange is in the game of charging fees to people that do trade, you being the trader. Okay, so hopefully that was a helpful explanation of leverage trading. Tell me if it was or not. Will Pepe bounce soon? I could actually see it because everybody is so freaking excited about this cryptocurrency right now. I could see it having a little bounce. I could definitely see it having a little bit of a bounce. It is a gamble, though, and I'd be very careful. Dua Lead said, I used to be a gambler. Leverage trading sounds like when my buddy would throw me some extra chips to throw on the bonus bet with the money I already had out there. Yeah, that's kind of what you're talking about. These technologies take time to be implemented. Be patient. That's right. So many parallels between the market and the casino. Yes, technical analysis is a little bit like card counting, is the funny thing, because you actually can use strategies at the casino to kind of game the system and win money. A lot of times it's illegal, so I'm not advising that you do that, but it is a possibility. Technical analysis gives you a much, much bigger leg up than card counting and blackjack, though, because essentially what that does, that gives you like a 1% bonus. So you've got to play 100 games to get one profit. If you're using proper technical analysis, you can get more like a 65, 70, 75% win rate, because you're going to have a much better understanding of where the market goes. Analysis is much, much more powerful than card counting or anything that you could use to game the system at a casino, but it is somewhat similar. Shaman723 says, I like how he interacts with chat. Thank you so much. I really want to help you guys to understand how to become financially sovereign. So we shall see. The half a second chart looks bullish. Yeah, so that's the funny thing with TradingView Premium. There are a lot of things that come with TradingView Premium, but you can actually look down to the 1 second chart and see what Bitcoin's doing. By the way, guys, if you don't know, we are actually affiliated by TradingView now. So TradingView reached out to me. We didn't even reach out to them. TradingView reached out to us and said, hey, we would love for you to be an affiliate of our business. And I've been using TradingView every day for 6 years. So I said, boom, that's awesome. I love it. If you look in the description box down below, you're going to get a link to sign up for TradingView Premium. And as far as what they've told me, you're going to get $30 off your first month when you sign up for TradingView Premium. I'm really excited about TradingView Premium because it gives you things like second charts. It allows you to have 25 different indicators. In fact, let me just see if I can bring up the page where it kind of explains all the differences here for you for just a second. Give me uno momento. Let's see. Let me see. I don't know if I can bring it up because I'm already logged in, is the thing. I don't know if it'll let me show the actual plans. Change plan. Ah, here we go. Found it. All right, so these are the different plans with TradingView. You can use the free version of TradingView, but you're going to be missing out on a lot of things. You're going to be missing out on VPVR, because VRVP, because that's a built-in indicator that you have to have TradingView from. You're going to be missing out on being able to use more than 3 indicators. If you're a technical analyst, you're probably going to be using 10 at a time or more. So that's a huge limitation. You're also not going to be able to look very far back in history. So these are different things that you're not able to do with TradingView, because of course TradingView is a very large company. They've got thousands of employees. They've got to keep the lights on, so they have to charge somehow. And the way they do that is by charging for Pro Plus, and Premium. And also, if you're using the free version, you're going to have to deal with a bunch of ads. And the ads are kind of annoying. The same thing on YouTube. You can use YouTube Red, and it does the same thing. You get rid of the ads, right? So these are the 3 different tiers of TradingView. This is billed annually, which is definitely the better way to do it. This is billed monthly. I'll just show you annually. Over on Pro, you get 5 indicators per chart, 2 charts in one layout. Long story, but essentially there's different layouts that you can add to a chart for different indicator overlays. Then you can have up to 20 price alerts, ad-free, volume profile indicators. That's your VRVP. And custom watch lists. Just the basic Pro plan is going to give you a lot, but Pro Plus and Premium are where you're really going to want to go if you are a constant trader who's looking at these charts every day like I do. With Pro Plus, you get 10 indicators per chart, 4 chart layouts, 100 active price alerts, and you also get intraday exotic charts. So those are those different weird day charts like 2-day, 3-day, all of that stuff, all those different exotic charts, as it says. Then you have indicators on indicators. You can overlay an indicator on another indicator. How cool is that? Now, going up to Premium, you get up to 25 indicators per chart, 8 charts with one layout, 400 active price alerts. Price alerts are a very big deal if you're an active trader. alerts that don't expire either, and you get the seconds-based interval. That is a huge deal, and you have unlimited saved charts layouts. Guys, TradingView Premium is an absolute it just makes so much sense for anybody who is doing this every single day. So I highly encourage you to use the link down below and sign up for TradingView Pro Plus Premium. I would recommend signing up for the premium version, but of course that is a financial decision that you have to make for yourself. All right, guys, it is FinSoft Friday, so I like to go ahead and more or less answer some of your questions moving into the rest of the stream, because I like to interact with you guys moving into the weekend. There's a great video that I think you're going to find a lot of value in coming out tomorrow, explaining why I believe that a major drop is coming to Bitcoin. Some of that's already started, but I want you to watch that, because when you watch that video, you're going to have a much better understanding of why the market is dropping. Not only am I going to talk about the technicals, I'm also going to talk about the geopolitical and macroeconomic factors that are leading to this major drop on Bitcoin. And these are all things that are going to have a huge shadow cast on the next year to next 5 years of price action on Bitcoin. I'm telling you a story tomorrow, and you're not going to want to miss it, so make sure you hit that post notification bell and tune in at 10 a.m. Eastern tomorrow, and that episode of Climate of Crypto will be going up, and I cannot wait to see you there for our updated and most recent Bitcoin price prediction and the reason why that is where it is. I like having my indicators indicate. Then use TradingView Premium. 83% of you guys said that you'd like to see more trade setups on CNC. Awesome. Good deal. You know how I found you? ChatGPT. I have got to hear more about this. I have never been told that before in my entire life. ChatGPT sent you to me. That is awesome. I'm going to need to know. I'm going to need to know what the story was on that, Choman. Choman Cameron. Welcome to the channel. I started seeing you the last couple of weeks, so that makes sense. All right. I enjoy ChatGPT. So cool. It is a very interesting program. Could you sum up how technical analysis should be used? The criticism also here is a tradable strategy cannot be formed from lagging indicators, and these TA videos often ignore real-world events. Great question. I am so glad you asked that, because that is a very common criticism leveled against technical analysis. There's 2 points there. Number one, how should it be used, and what are the realistic expectations? And number two, what about real-world events? Great questions. Let's start with that. Lagging indicators are a very real phenomenon, but here's the deal. We cannot predict the future. So while using lagging indicators is definitely a limitation of technical analysis, it is a limitation of everything. It's a limitation of meteorology. It's a limitation of physics. It's a limitation of economics. It's a limitation of stock market analysis. It's a limitation of geopolitical analysis. It's a limitation of character analysis. We could level the exact same conversation at, well, we don't know what Putin's going to do in Ukraine because we can only see what he's done in the past. We don't know what he's going to do in the future. Right. But he has a track record, and there's certain things that he does over and over because of certain reasons. There are certain patterns that we see in his life, that he's trying to expand Russia's borders because he doesn't feel secure, because NATO surrounded him on all fronts. Now even Finland doubling NATO's border with Russia. They don't feel secure. He wants to build out a Russian empire similar to the Soviet Union by expanding their borders towards the Caucasus and the Carpathian Mountains. He wants to go ahead and capture a lot more than Ukraine. He wants to go all the way to Warsaw. He wants to go all the way to Belarus. He wants to go all the way to Latvia, Lithuania, Estonia, Romania. He wants to take over Moldova. That's what we're talking about on the Russian front. But how are we able to predict that that's what Putin wants? Well, first of all, because sometimes he says that, but also he's got a pattern, right? There's a track record. With Bitcoin and cryptocurrency, yes, we're dealing with the past to use that to predict the future. And there's two implications on that. Number one, that's the best we have. There is no better way to predict the future than by looking at the past and the present. And so that's what we do with technical analysis, is that we use the past and we use what's happening in the very present to predict with a certain probability what will happen in the future. We don't know for sure if Russia conquering Ukraine will lead them to declare war on Poland and thus bring NATO into the largest conflict on European soil that we've seen in 75 years. We don't know that he'll do that, but we can predict with a lot of certainty that that's what he would want, especially since his friend over in Belarus, oh goodness, what's his name? Lukashenko said that that's basically what they want to do, and the former president of Russia, Medvedev, in between both of Putin's first and second term, said the same thing. So we can predict with a lot of confidence that that's what he wants to do. Similarly, if we've got 17 different technical indicators that all say the exact same thing, and they all have a very strong track record, then what we're going to do is we're going to say, okay, these are largely confirmed technical indicators that are going to give us confirmation that something's about to happen. If MACD crosses bullish, Lux Algo gives us a buy signal. If we break critical resistance, At the same time, we have RSI crossing above 50. If we have all those different technical indicators coming into play at the same time, then that's what we call confirmation. How do we build the confidence in that confirmation? Well, we look at the other definition of confirmation. That means looking back into the history of the TA to see what it's done in the past. If 95% of the time, this exact same setup has led to this exact same movement that we're predicting, then we're going to say with a lot of certainty that we believe that movement will occur, given no other variables are present. So that's what we talk about with confirmation. In fact, just so you guys know, there's an updated video in Club DeFi on confirmation. I just remade the video over on confirmation because I thought I could make it even better than it already was. So if you're in Club DeFi, I'm now putting out new content in Club DeFi's Principles of Technical Analysis. The first video for that went up yesterday. That video is actually very applicable to this. Confirmation is where you look at a ton of different factors, maybe 5, 10, 20 different technical indicators and chart formations and resistance breaks to say, okay, I think this movement's about to occur. And with that, we can give ourselves a 60, 70, 80% likelihood that a certain movement is going to occur because we've looked at the past confirmations of what's happening right now. So as to the question of we're only using lagging indicators, we're only ever using lagging indicators. We're only ever using lagging indicators. You know, unless you're dealing with something like physics, where you can predict where the moon's going to be in 357,000 years because it uses the exact same orbit and there's no variation there. Pretty much if you're trying to predict anything else that doesn't involve very clearly and well-defined and known laws of physics, then you're going to have some degree of variability on your prediction. That's the same thing if you're using fundamental analysis. Now to the second question, it's a much easier question. What about technical analysis not bringing into effect real-world events? That's why we talk about geopolitics on this channel. That's why we talk about macroeconomics. That's why one of the biggest things I talk about are the effective federal funds rate, the stock market, the Dixie, the SPY, the DJI, the CPI, the Russian-Ukrainian war, the pandemic, the possibility of China invading Taiwan. I agree with you. Technical analysis a lot of times does not take into account real-world events. That being said, with technical analysis and with looking at real-world events, we are able to paint a very clear picture of what has happened and therefore predict what might happen with some degree of probability. It is a very bad idea to ever say, I guarantee that something is going to happen. And if you do say that, normally you should be saying that with kind of this undertone of, I think this is going to happen. That's the implication. Like, for example, today's title, Bitcoin is heading for 25,236. There's a subliminal understanding of that's the prediction, not a absolute fact, because I can't read the future. No meteorologist can. No stock market analyst can. No fundamental analyst can. So I think that that's a very unfair standard that's put on technical analysis to be able to predict the future perfectly when no one can predict the future perfectly in any way, shape, or form. Or Doc Brown wouldn't have needed the 1985 Almanac to predict who was going to win the World Series in 1988 or whatever year it was. That's what we're dealing with here. I want to have a fair standard, and the fair standard for Bitcoin and crypto is that we are able to come up with as confident of a prediction as possible, and that does involve real-world events. It does involve analyzing past trends, and it does involve some degree of uncertainty and some degree of saying, I can't guarantee this is going to happen. I do think this is going to happen, but just in case, here's how you hedge your bets. Here's the long trade if you think it's going to go down and you're entering a short trade. Here's the short trade if you think it's going to go up and it actually ends up going down. You prepare for both, but you predict one's going to happen. You put your bet on that, but you're ready in case something else happens, and you can win almost every single trade so long as you're prepared for both scenarios and you understand technical and fundamental analysis. Wonderful question. Wonderful, wonderful, wonderful question. Further on, you said support, resistance, and moving averages make sense, but drawing patterns and expecting the market to adhere seems like astrology for men. So the deal here is that astrology does not actually have an impact on society right now. And hear me out here, because I'm not an astrologist. I don't believe in these zodiac signs. I'm more than happy to let you guys know that I think a lot of that's hokum. All right? I'm just going to put that out there. I don't look down on you if you think that, but I don't subscribe to that. That being said, it was impactful for the Maya. It was impactful for the Aztecs. What do I mean? Chart formations are impactful because people think they are. One of the definitions I give for technical analysis is that technical analysis is the art, not the science, of analyzing past trends to predict future performance so that we might understand the machinations of the traders and see how their machinations manifest into movements in the market. What I mean by that, in short, in maybe a less poetic way, is the technical analysis looks into the past to predict the future, and the way that we predict the future is by seeing how people interpret the past. And technical indicator has no power, almost no power. So it has some, but it has almost no power if nobody knows about it. That's why Lux Algo is so powerful. It's adopted by over 50,000 traders. The vast majority of people that are trading Bitcoin regularly are using Lux Algo if they're a professional trader. So it's got power. Astrology has very little power or say on what's going to happen in society right now. But you have a society that says, we're going to select a leader, and based on where the stars are, we're going to choose who the leader is. You can bet your bottom dollar the stars are going to have some kind of impact on that. Not because the stars are sentient, not because the stars are spiritual, not because of any of that, but because the people decided that if the stars say this, then we're going to do that. In that case, it's not the stars that are having an impact. It's people's interpretation of the celestial reality having an impact. You see my point? So I don't subscribe at all to astrology. I think it's a complete joke. I was born August 23rd. You guys tell me what sign Pisces, I think. I don't know. Leo, I think it's Leo and Pisces are right there at the end of August because it clicks over, I think. 22nd, 23rd, because that's when the solstices are, 22nd, 23rd. I don't know. But it is definitely not something that's having an impact on the market because nobody's trading based off of the phase of the moon. There are a couple people. I've met one person that does that. I'm not going to say the name, but I was like, oh, really? Anyway, hopefully that makes sense to you. I feel like real-world events, there's so much speculation, but if you zone out everything, then solid TA, I've done a heck of a lot better. The other thing to keep in mind is that there is a principle in technical analysis that goes all the way back to the very founding over 100 years ago that says the moving averages the charts average everything. That means that if something has an impact on the Bitcoin or cryptocurrency or stock market, then it's going to show up in the price. So when the price moves, that's essentially the price information downloading whatever news event there was. If EFFR goes up 25 basis points and Jerome Powell teases a rate pause like he did on the 3rd, then Bitcoin goes up $700. Okay, the market just downloaded that information and forever stored it in the chart history of the market. It stored it. It downloaded the information and stored it. Now we can look back on the chart and see, okay, that had a bit of an impact. You don't believe me? Check this out. Look, Bitcoin stored this information. What information did it store? It stored information that this was important to people. Jerome Powell teased a rate pause right about here. A little bit later, do I have that right? Yes, I have that right. A little bit later, Bitcoin rallied $1,000. I said $700. It was $1,000. That's Bitcoin downloading that information and storing it for later. Now, if we ever do technical analysis on that part of the market, we're going to see, okay, that had a huge impact. All right. TradingView has phases of the moon. It probably does. TradingView is not in the game of choosing what technical analysis works and doesn't. It is in the game of providing a platform for people to use. Let's see. And by the way, when I say astrology, I think is hokum. What I'm saying is that if it's a certain day, that's going to lead you to have a certain mood. I don't subscribe to that personally. As far as there are certain phases of the moon and everything, and there are certain things like, yeah, I don't really know a whole lot about it, so I should just keep my mouth shut is actually what it should be. What I was mainly saying, and maybe I went a little too far, what I was mainly saying is that I don't think that it being a certain day and there being a certain star out is going to impact your mood. Horoscope is what I was talking about. I seem like a Leo. Okay, all right. I seem like a Leo. I've got all the astrology people that hate me now. Feel free to come and troll me in the chat. That's fine. I have an open mind. I'd love to hear it. I could be totally wrong. I've been wrong before. Been totally wrong before. Okay. All right, guys. Really appreciate all of you tuning in. Any final questions, feel free to go ahead and let me know. Thank you guys so much for tuning in. I hope that you guys are enjoying today's episode, and I hope you guys are looking forward to the content that's coming out tomorrow. Make sure if you haven't already to go ahead and subscribe, sign up for Club DeFi's Principles of Technical Analysis, because if you don't know, we have a brand new video over there in Club DeFi. You can scroll down in Club DeFi, and you will see it right here. It's continuation. Make sure to go, confirmation. It's right here. Make sure to go ahead and check this out. Really appreciate all of you guys for tuning in. Make sure to sign up for Lux Algo using coupon code Jebb, J-E-B-B. Oh, and by the way, I forgot, there's one more thing I need to let you know. For any of you guys that are in CT2A and you're looking for a coupon code for Principles of Technical Analysis, check this out. There is now a video that I made for you in CT2A. It's the very first video here where it says, get 25% off Club DeFi's Principles of Technical Analysis here. If you were in CT2A, make sure to go ahead and check out this video or check your email, because I sent an email to everybody who has signed up for marketing emails that was in CT2A with that coupon code, so that instead of you having to email support@cryptojebb.com to get the coupon code to sign up for Club DeFi, if you were a CT2A alumni, now you can just go there, go into your CT2A, or check your email that you signed up with, because I sent out an email yesterday with the coupon code, and you can sign up for Club DeFi's Principles of Technical Analysis with that 25% off coupon code. Guys, I really do have to go. Before I do just first want to thank each and every single last one of you for watching, as always, and I will see you guys in the next video. Peace.